Welcome to Master Wealth, where we're diving deep into the world of investing for cash flow and wealth building. If you're eager to learn about strategies that can help you generate income by owning assets and securing your financial future, stick around to the end of the video. Investing for cash flow is something we truly enjoy. And when we say cash flow, we're referring to getting paid for owning an asset rather than making a profit by selling it. Let's illustrate this concept because there are various types of assets that can offer this kind of cash flow. Suppose, for the sake of this example, you decide to purchase this box. Most traditional investment strategies revolve around the idea that the goal is to acquire something for $10 with the intention of selling it for at least $100 at some point down the road. This would indeed be a fantastic investment. However, if you go down that path, you won't generate any income until you eventually sell the asset, and once it's sold, you won't possess it anymore. What we prefer to do with the majority of our investments is to buy an asset. And instead of fixating on the selling aspect, we aim to generate income simply by holding onto it. This isn't something we do with all our assets, but it's our approach for most of them. Regardless of whether its value goes up to $1,000 or down to $100, our goal is to consistently receive a portion of earnings simply for owning this asset. This can be on a monthly, quarterly, or annual basis. Now, the question arises, what kind of asset could this be? One option is investing in dividend-paying stocks. In this scenario, you invest in companies that distribute a portion of their profits to shareholders regularly, often every 3 months. It's important to note that not all companies offer these types of dividends. Investing in real estate is another example of this principle. This approach requires more time, capital, and effort on your part. However, if you purchase real estate and rent it out to someone else, you can generate rental income. This rental income should ideally cover expenses such as property taxes, insurance, maintenance, management fees, vacancy costs, and any outstanding debt, provided it's managed properly, while still providing you with additional cash every month. As a result, one of our primary objectives is to acquire assets that produce a steady stream of revenue. This allows us to explore various ways to increase this cash flow. Now, we understand that not everyone has extra funds readily available to invest in real estate, and that's perfectly fine. However, if you have the intention of making real estate investments in the future, it's advisable to start setting money aside now. Accumulating the necessary financial resources will enable you to engage in real estate investment. On the other hand, if you're not interested in investing in real estate or lack the financial means to do so, that's perfectly acceptable. You don't need to put your money into real estate to amass wealth. There are other alternatives. It's entirely possible to accumulate significant wealth without ever delving into real estate or stocks, as some individuals have done. You need to determine what works best for you personally. What are your other options? Whether you don't have the financial means to invest in real estate or simply have no interest in it. You might want to consider investing in real estate funds if you want to maintain some connection to the real estate market without directly owning properties. Alternatively, you can still explore investing in stocks, even if the real estate option doesn't appeal to you. One of the appealing aspects of investing in stocks is that you can start with as little as $10. Therefore, if your goal is to generate a steady cash flow, one strategy you can implement is setting up a system where you allocate a specific sum of money each week for investment, and the funds are automatically deducted from your checking account. You have the flexibility to decide whether this money is deducted and invested in a portfolio of dividend-paying stocks. dividend-paying ETFs, dividend-paying index funds, or dividend-paying mutual funds. The specific mode of investment isn't critical. The key is to continuously build up your cash flow. Exchange-traded funds or ETFs are essentially investment funds that provide exposure to a wide variety of stocks. For instance, the ETF with the symbol SPY offers exposure to the S&P 500 index, which tracks the performance of the 500 largest publicly traded companies in the United States. While some ETFs provide exposure to the entire stock market, others focus on specific sectors, such as healthcare. Given the dividends that ETFs pay out, it's advisable to consider making most of your investments in them. Therefore, you might want to consider having funds leave your checking account and flow into a portfolio containing several ETFs geared towards earning dividends. These dividend-paying ETFs will eventually yield income for you. However, we strongly recommend not using this income for personal expenses. Instead, reinvest it to acquire new assets that can generate a continuous stream of cash flow. By following this approach, you'll consistently allocate a portion of your earnings to accumulate more assets. The ultimate goal is to steadily build a system that generates additional income sources over time. Eventually, when the time is right, you'll be able to utilize this cash flow to support various aspects of your life. The objective is to structure your lifestyle around cash flow rather than relying solely on income earned from work. When a significant portion of your earnings goes towards sustaining and enhancing your lifestyle, it becomes challenging to build real wealth. While the individuals aim to, one day, live off the income generated by their assets alone, as opposed to relying entirely on income from their jobs or businesses. Of course, the situation is different if your assets can be easily converted into cash. When we refer to your income, we're specifically talking about the money you earn through your job or the profits from your business. The goal is to eventually support yourself solely through the passive income generated by your assets. Income that continues to flow, even when you're not actively working. That's the essence of genuine wealth. Thank you for joining us in today's discussion about investing for cash flow and building wealth. We hope you found this information valuable on your journey to financial success. If you want to learn more about mastering wealth and achieving your financial goals, be sure to hit that subscribe button and don't forget to turn on notifications so you never miss an update. Together, we'll explore various strategies to grow your wealth and create a more secure financial future. Remember, wealth building is a journey, and we're here to guide you every step of the way. Stay tuned for more insightful content, and until next time, keep hustling towards financial success with Master Wealth.